Welcome back to the Energy Academy. Now we know how LMPs are calculated, so let's take a look at how ERCOT's wholesale markets work. Let's start with the day-ahead market. Participants submit bids and offers for power to be delivered the next operating day. QSEs, representing generators, submit offer curves to sell certain amounts of power at specified prices. And LSEs and load resources submit bids detailing the price and quantity of power that they want to buy. The price of power at each settlement point is then determined by the intersection of these supply and demand curves. This is an oversimplification, and there are other factors that go into determining prices in the day-ahead market. Some of these include the startup costs and startup times of individual resources, any other services that resources might be offering to provide, and the physical limits of the transmission network. Let's look at an example of an offer curve. This gas plant is willing to supply 100 megawatts if its LMP is between $30 and $40 per megawatt hour. But how do the timings of this market work? Well, the day-ahead market operates at an hourly granularity. Any resource that is accepted to dispatch in the day-ahead market must do so continuously for the entire hour in which its bid or offer was accepted. Resources can submit bids and offers into the day-ahead market between 6 a.m. and 10 a.m. of the day before the operating day. So let's say that the gas plant that we mentioned before is accepted to provide 100 megawatts between 3 p.m. and 4 p.m. the following operating day. It is then financially obligated to generate 100 megawatts for the duration of that operating hour. In the day-ahead market, participants can offer to provide energy, meaning the generation of electricity to serve demand, i.e. the process that we've talked about throughout this series so far, as well as ancillary services. We'll come back to ancillary service in more detail in the next episode. Participants looking to provide both will submit bid and offer curves for energy and ancillary services simultaneously. After 10 a.m., ERCOT executes. For each hour of the following operating day, an LMP is generated at each settlement point. Meanwhile, for every operating hour, a system-wide clearing price is determined for each ancillary service. Awards for energy and ancillary services are co-optimized to ensure the least cost across the system. Once the day-ahead market has closed and awards have been made, these awards are then communicated to resources via their QSEs. QSEs then update their operating plans for those respective resources. If ERCOT thinks it might need extra generation in the next operating day, it can procure it via a process called Reliability Unit Commitment, or RUC. From around 2:30 p.m. onwards, RUC runs every hour. If ERCOT believes it may not have enough supply in the event of forecast errors, it can use RUC to commit a generator to be online in the next operating day. This just means instructing a unit to operate during hours it wasn't previously due to be online for, and paying it to do so. These will typically be thermal generators, like coal or natural gas plants, with long startup times and large capacities. And that's how the timeline of day-ahead operations plays out. We'll take a quick detour now to explore how ERCOT's ancillary services work, and then we'll dive into the real-time market. See you then.